Hi, good afternoon, Mr. Listen.
Good afternoon.
Good afternoon.
Nice to meet you.
How's your day? That's
It's
fine.
great.
Yeah, it's great.
Nice weather today. Have you had lunch yet?
Yeah,
Of course.
very delicious. Nice to hear that. So, thank you very much for coming over today and listen to our MPF plans. So, I'm Carl and she's Connie.
Connie. Okay, so after talking to you over the phone, we understand that you're planning for your retirement in a number of years. So we have prepared a number of suggestions and an analysis on your current financial situation. So please take a look at it. So first of all, thank you for choosing our company. We are the world's third largest publicly held bank, and we have been the most popular MPF provider in Hong Kong. So I'm Connie, and I'm a financial analyst at HSBC and a certified public accountant. And he's my colleague Carl. He's the senior financial accountant at HSBC and a chartered financial analyst. So we have prepared for you an analysis on your current financial situation, and according to that, will be based on your current financial situation, making a number of financial plans for your future years. And we also have a number of MPF recommendations and other financial suggestions for you, so as to pave your path towards your retirement. So, first of all, after we understand your need to retire in around 10 years and to retain your current quality of life after retirement, we are planning to help you meet your future expenses after your retirement and in your upcoming 10 years. So, upon studying your current budget of expenses, we can see that you will be spending around $20,000 per month on your daily expenses, including like utilities and food and other portions. We will try to keep the portion the same for you so that you can retain your current quality of life and live the way you are as you are now. But we would suggest that you can join an insurance plan for your medical expenses, because we can see that you are spending quite a lot on it. And then joining the plan would be a very quite suitable option for you. And we will also suggest that you might have to adjust your miscellaneous expenses a bit so that you can spare a little more money for investments so as to make your money grow and meet your future needs. So after our calculation, we can see that you need around a total of $5 million by the end of your retirement year so as to meet your future expenses after your retirement life. So we have been looking at your current assets and spendings, and we can see that you are currently having an MPF plan of around 5% returns and $500,000 of deposit in your bank and regular interest from it, and also you still have a 10 years salary upcoming in the coming 10 years, and in 5 years time you will be able to repay all of your mortgage for your apartment, and by 5 years time you will have accumulative of $2 million from your MPF plan, deposit and savings. But we can see that your current plan might be still having a little distance from your retirement needs, so we will try to advise you on more prominently progressive and profit-making MPF plan and also other investments so as to meet your future needs. And there will also be a certain amount of chances that the future prices might fluctuate, but we will try our best to provide the best recommendations for you so that we can help you make a more adjustable retirement life. First of all, we're going to look at the recommendations for the MPF plan. And here are the offerings of our company's mandatory pension fund plan, that is the Super Trust Plus scheme. And here is a list of our constituent funds. And from this list, we have carefully chosen 3 special funds which suits your current situation. and they are the Global Bond Fund, Balance Fund, and Growth Fund. And first of all, I will introduce the details of the low risk recommendation Global Bond Fund, and my colleague Carl will introduce to you and further analyze on our suggestions afterwards. Okay, so the Global Bond Fund is mainly a set of global bonds and fixed income securities, and it includes a number of treasury bills and other cash and securities from like UK and the Asian markets. It is a relatively new fund to our Super Trust Plus plan, but in 5 years' time, in below 5 years' time, it had already been making an accumulative return of around 4%, and that is quite a stable return. Still, we are still projecting quite a profitable and stable return in the upcoming years, and it has relatively low risk as it is composed of a number of treasury bills and low risk combinations of investments from some nations and different countries, so it's rather stable. And I'll pass the meantime to Carl to introduce more.
Thank you, Connie. Now we'll go over the following two funds, which is the Balance Fund, and it is slightly more risky than the previous one, but it yields higher returns in the long run, because as you can see, over 10 years time, you will earn more than 30% in your MPF deposits, and this will help you along your retirement needs and fulfill your needs to maintain a quality of life as of now. And also, this Balance Fund will invest in mainly the Hong Kong stocks market and the global bonds market. So it is mainly affected by the changes in market interest rate and stock market fluctuations only. And it is relatively not that risky as you think. And if higher returns is what you're after, then Growth Fund is probably your first choice because it invests in global equities, and in the short term, it is quite a lot more profitable than the other two. It yields about 10% in less than 5 years' time, and also it is investing in the global equities, so it is mainly focusing on the Hong Kong stocks market again, and that is currently stable in the recent few years, so it will not result in great losses, but it is one of our most profitable MPF options that are offered by HSBC currently. So if you are after a more comfortable life after retirement, then Growth Fund is probably what you need. And from the three funds that we have projected, and this is our recommendation. As you can see, in the short term, the Growth Fund is more profitable, and but in the long run, the Global Bonds Fund would probably become more profitable because the Growth Fund will be more profitable because it is a less risky, and sometimes the market fluctuations will result in some changes in the returns. And also, we observe that Mr. and Mrs. Chen, you also have quite a high medical expenses in the current few years. You spend about $2,000 per month, and that is quite a lot. As we all know, as we age, we often need more medical expenses. And so we would suggest you to purchase some health insurance plans. And this is the health insurance plan, which covers hospital fees up to $500 a day, and will reimburse up to $5,000 if you have some major surgeries. And for about $3,000 annually, that is about $250 a month, you may have up to $10,000 savings in the total hospital and surgical fees, and that is quite a lot if you count over the coming 10 years. And this will help you save more money by the time you retire as well. And also, we would suggest that you buy some of your annuity plans as you have finished your mortgage funds after 5 years. After that, you have about $96,000 a year. So you can reinvest that amount of money in annuity plans to maximize your profits. And this plan can ensure that you will get up to $1 million with minimal risk after 5 years, that is, by the time you retire. And so this plan would help you to get a more profitable and a more comfortable retirement life afterwards. So our final recommendation would be the balanced fund choice, and combined with the health insurance and retirement income annuity plans, because after all it is less risky than the growth fund, but still it uses nearly $5 million, which is close to your needs, and this would help you along your retirement life. So do you have any questions to ask? I hope that you have gained a lot more about MPF knowledge, and you will plan more about your retirement life afterwards.
I just want to ask, how can you calculate the $5 million that I needed?
Oh, the $5 million, according to our study on your current budget, that you spend around $20,000 per month, we estimate that you will live about around 65 to 90 years old, approximately, but we will always adjust the plans according to your future preference and health conditions, and then we will continue to adjust your plans. And even after your retirement, if you are looking for a more comfortable life or more flexibility, like you want to move to different places, or you have other preference, or longer or shorter life expectancy, we will try to adjust your plan for you. But like 85 to 90 years old, that is the common life expectancy of Hong Kong people, and we will expect a certain life quality, because that is the common age of people, and we will continue afterwards, even if you have different, like after 10 years, by the time of your retirement, you can revisit your financial consultants again, and then we will adjust the flexibility of your investments.
So I hope that you have learned more about MPF today, and hope you have a nice day. Thank you very much.
Thank you.
Thank you.